Good morning and welcome to the session on Payment Services Directive 2 and open banking. We're going to be looking at the new initiatives from legislation and regulation and how that impacts us as corporate treasurers and what potential opportunities it might give us. I'm delighted to be joined by an expert panel, and to start off, Tim Decker from Lloyds Banking Group is going to be giving us a little bit about the background and the reality of where we are with open banking now. Tim.
Thank you. So just as introduction, background to why we have PSD2 and open banking, just a reminder, this has been introduced by the regulators to improve competition in the payments industry, and secondly, to improve the services and the products and the choice for our customers. So that's the whole reason for open banking and PSD2. We're going to see how well informed or how well you believe you're informed about open banking and PSD2. So hopefully you have already done these sessions and you've used the app to vote. So we're going to take a vote. We want to know how informed and prepared you are to deal with the challenges and the opportunities offered by PSD2 and open banking. So I'm hoping there's some feverish activity going on with your apps. We're starting to see some votes coming in, which is great. So interesting, because PSD2 is already live. It went live in January this year, and 40% of the voters, 44% of the voters have not done any preparation so far. I hope that doesn't extend to the bankers in the audience who would have had to do something to be compliant. But it's good. There's obviously some preparedness, somewhat prepared. Now, no preparation as yet. Does that mean that people don't know what's going on? But thanks for voting. And hopefully, at the end of this session, we'll know more about it, and after the panel session as well. So, open banking and PSD2. This welcomes us to a world of acronyms, most of which are three-letter acronyms, TLAs, AISP, CMA9, PSD2, TPP. I'm not going to try and explain those, and I apologise in advance on behalf of both myself and the panellists if we slip into using these acronyms without explaining what they mean. So a little bit about the key stakeholders and the driving forces. So just to remind ourselves, this is all about improving the services that are offered to our clients in the payment space and to introduce more competition into the banking industry. So in the UK, we were ahead, I suppose, of Europe in starting open banking, and the Competition and Markets Authority imposed some regulations. They had what they described as the remedies, and the 9 biggest banks in the UK were expected to comply with those. And these have introduced a number of different things. The first one was the publication of open data back in June of last year. We're going to see some more improvements to that, but that requires banks to publish tariffs of the bank accounts that they have and that they offer. It also requires them to offer information about where ATMs are located, where their branches are located. So a lot of very useful stuff that needs to be publicly available. And then at the beginning of this year, the third-party payment providers, TPPs, were able to go live in January, and we started a period of testing for account information service providers, AISPs. And AISPs are able to access, with your permission as a customer, both a personal customer or a business customer, they're allowed to access and pull down the data of your bank account. Now that's useful. It's very useful for you as a treasurer to form a consolidated position across multiple accounts, but it also lends itself to lots of other things about KYC, about an individual customer, loan applications, lots of different applications that we'll see. So lots of players, and there's a Venn diagram here. People say, well, what's the difference between open banking and PSD2? What came first, the chicken and the egg? Effectively now in the UK, the open banking and the open banking implementation entity, OBIE, another acronym, are driving the banks towards the compliance for PSD2 in the UK. And it's a very regulated approach. We are 4 different regulators: HM Treasury, Competition and Markets Authority, the Payment System Regulator, and the Financial Conduct Authority. So there's a lot going on. It's a big programme, lots of interest or lots of work for the banks to do, but ultimately this is going to lead to much better services for corporate treasurers, individuals, small businesses, and more competition for us as banks. So what's in it for me? So payment improvements. One of the first things that happened was about transparency of payments, what we've called OLO, one leg out. So payments going out of the EU are required to have transparency of cost, which wasn't the case previously. If you sent a payment to, I'm sure some of you would know, if you sent a payment to Japan or somewhere like that, you'd have no idea how much the beneficiary was going to receive. So payment improvements, it opens the way to money management. We've talked about what our corporate treasurers have been doing at a large scale using SWIFT, multi-banking to pull information together, but it opens the way for that for smaller businesses. It also opens the way for that to be done on a real-time basis. Product comparison and switching. The way in which banks advertise and sell their products, their banking products, is likely to change. We introduced in the UK current account switching process. It works for individuals, it works very well. It now works for businesses as well. So if you can compare banking products, tariffs, rates, overdraft rates, etc., then you can link that into a comparison website with the option to transfer your bank account. So we're going to start to see a lot more mobility of bank accounts for individuals and businesses. It also lends the way for lending decisions. If you, as a lender, can see 3 years of someone's accounts provided to you as via the AISP, Account Information Service Provider model, it enables you to make lending decisions based on real data. So what to expect for the future? So we went live with in January. We've done testing, that is now complete. There are starting to be a lot more movement, and we will be moving to payment initiation testing so that third parties can make payments on your behalf with your permission. And then as we go through 2019, we're going to introduce strong customer authentication and secured communication rules. And the big date for PSD2 compliance is going to be in September 2019. So that's when all of these services, all of the online payment services that you can use as an individual or as a business will have to be available to be accessed via a third party. So that gives you some idea of what's going to be going on in the future. And I hope that's given you a little bit more background. And we're going to now hand over. No, that's not now. I think we're on to our panel. No, we don't want you to vote yet. Can we just? We should be going to another slide. Yeah.
That's fine.
We'll just leave it on there.
Let's leave it on there for a moment. Thank you.
Okay. Thank you, Jonathan.
Thanks, Tim. So a really good introduction. Thank you. Let me take this opportunity to introduce the rest of the panel. So we've got a number of different views represented here. So views of corporate treasury, views from, I guess, from academia who's been involved with the fintech side, but also views from the banking people who are actually trying to implement this from a technology perspective and trying to work out what sort of services that we, as corporate treasurers, might want to have. So let me introduce them. Pedro Madeira. So Pedro is the group treasurer at Ardona Group. Next to him is Yogesh from Lloyds Banking Group, Yogesh Shalom Parker, who's the API and open banking communications expert at Lloyds Banking Group. We have Nadia Sultan, who's the one of the treasurers at Leon Del S. Sorry, my apologies. Yes, thank you. And finally, we have Marcos Zachariadis, who's from the Warwick Business School and looking very much at how banks and fintechs work together in this new and interesting market that we are starting to create. Tim, so you made a number of interesting points around open banking, and I guess this sort of change is very similar to what we saw with the introduction of things like cloud computing. So cloud computing has been, I guess, described in a sort of tongue-in-cheek fashion as processing on somebody else's computer. You could argue that open banking might be described as doing banking with somebody else's customer. And I think one of the interesting things might be what those services might be. So let me just put this back to the corporate treasurers. Nadia, do you want to go and start off? What do you think that this opportunity, the open banking opportunity to gain access to your accounts for information or payments, what might that mean for you? What opportunities might that open up?
Yeah, so one of the issue the corporate treasurers are struggling with is a real-time update on the cash management position. So right now we have hourly update on the intraday statements, but we are dependent on that 1 hour to see whether we have received certain receivable or where our payments are. So I believe open banking would solve that issue for us and have a real-time update instead of an hourly update. Furthermore, on the payments, for instance, when there are multiple intraday, so multiple banks involved when you're making a transfer, just the example you gave to when you're making payment to Japan. So you really would like to know what the vendor is going to receive and so what the charges are going to be. And right now you're dependent on your cash management bank to find out which charges was taken from. Yeah.
So essentially some really good things which are going to actually tackle real problems that you have today.
Yeah.
And do you think, I mean, in terms of buying those services, do you think that you're going to deal with technology vendors who are going to come in, these new fintech companies maybe? Or are you expecting your bank to provide overlay or dashboard services to you as a corporate treasurer?
So eventually we will be really relying on our cash management bank. So we are going to ask, like, where are they at the moment? What are they doing with the open banking and PSD2? And what can they provide us in terms of those transparencies?
So not a huge amount of information currently from your cash management banks on what their position is. I guess that's a reflection of where the UK is versus the rest of the EU in terms of the open banking project. I guess what I would term it as the UK has taken an agile approach to the development of this and has created the minimum viable product, originally focusing primarily on consumers and SMEs, not corporates, and has done effectively produced a minimum product to test what the market use is, to test how it works in practice, whereas the EU is taking more of a waterfall project management approach and is building everything back from that deadline to say, okay, what would we need to go make sure we have these deadlines? And both approaches are completely valid, you just get different outcomes from that. Pedro, let me ask you, where do you see the opportunities of having better access to your accounts from a corporate point of view?
Well, it's an interesting question because it's certainly, I mean, the first thing is a big sigh when you see, well, first you're concentrating on retail and SME because that seems to be what the regulator always concentrates on. So corporate treasury is always like an afterthought. But I mean, there's some quite interesting opportunities. Again, we use multiple bank accounts. And I mean, if you're a bigger corporate who goes down the SWIFT route, then you can implement a SWIFT solution and have a standardized solution and get multiple banking information. But open banking gives you other potential alternatives to that, in which you can have access to your multiple bank accounts in one platform. I mean, right now it feels to us that there will be third-party solutions. If this actually goes to the corporate treasury space, that will end up being the way, rather than we use, for lack of a better example, Lloyd's solution to access our Barclays accounts, our HSBC accounts, our RBS accounts. And it might be that one bank has such a good online product that we can then use. It kind of feels to us that it will be via third party, but ultimately we don't care. I mean, right now I have four main clearing banks, so 4 payment systems, 4 bank reconciliation systems, 4 ways to download statements, to automate things. I don't use SWIFT because cost benefit wasn't there, so for us is a really interesting space to see if that develops. I mean, in terms of the payment side and PSD2, it doesn't feel it will affect us as much right now. We do have, part of our business does have online presence. It still feels like we will have more alternatives of how our clients pay to us, and we'll have to accommodate to it and incorporate it. It doesn't really feel it alters the way ultimately we do business. But again, I mean, it's a little bit watch the space and see how it develops.
So I guess you could summarize that by saying actually you're watching what will happen in future and what things will be available to you.
Yes.
At some point when your cash management banks eventually say, well, these are the things that we will be able to support, and these are the fintechs maybe we're working with or maybe not. We talked about API access. So Yogesh, I mean, what's the difference between API access and the SWIFT for corporates type of access that Pedro was mentioning? What's API?
Oh, what's API? So API it's a technical term. It's application programming interface. It's nothing but it's just a connectivity mechanism between 2 pieces of software. That's what it is. And they've been around for 20, 30 years, really, APIs. But that's the way one software connects to another and either requests for some information or asks that software to do something. So for example, your mobile banking app, you might actually say, when you launch the app, you want to see the balance. What the app is actually doing is making an API call over the internet and saying, get me the balance. And so the processing is happening within the bank's accounting system, and all that's happening on your screen is just the screen bit. And the logic happens somewhere else. It comes back, shows you the balance. You could also be saying, I want to make a payment. So you populate the whole field, sort code, IBAN, etc. And you say, make a payment. And the entire payload, which is who am I paying, where from, how much, what date, is sent to the bank. And then the bank's payment engine picks it up and executes it. So that's really what an API does. But the key thing about API, compared to some of the other mechanisms, is that it's real time. And what you would call synchronous, in that if I ask you to do something, I get a response back immediately. And so the difference between the traditional SWIFT way of doing things, and SWIFT would be addressing this as well, by the way, they have a response, but is I would get an empty 940, which is my end of day statement from yesterday, and then I can get occasionally through the day an hourly empty 942, which gives me transactions from the beginning of the day to now, or from the last time I got it to now. And so you as a corporate or your ERP system has to pick the last balance, pick up the latest things, add it all up, and give you the latest cash position, right?
Yeah.
Whereas with APIs, you could effectively go to one bank and say, give me all my transactions, all my balances, and you get that in real time instantaneously. You could be saying the same to all your 4 banks, and you could effectively have a view of your entire dollar, yen, sterling position in one go. So API allows you more real-time access.
So this is like a sort of an overlay bank, but on steroids, tremendously powerful means of actually seeing what's going on in your accounts.
That's right.
And would you say that's being driven by the move to faster payments worldwide? We were seeing developments in Australia, in the US, of course, SEPA credit transfer instant in Europe. Is that actually fueling this need to move to more real-time types of interface?
So not necessarily. I mean, faster payments is real-time, or real-time payments are real-time, but this move towards adopting APIs or regulators saying that banks should implement these APIs is more towards more real-time business, giving businesses and corporates view into what's happening with their business and cash flow in real time. And in fact, payments as well, when you said I can make a payment in real time, you could be as a corporate building propositions where in the past you couldn't do something because the payment couldn't be part of that customer journey. So for instance, I'll just make up something. So say motor finance. I might be a motor finance company. I have lots of dealers I work with, and the dealers, a customer walks into the dealer, wants to buy a car, looks at the finance. The CRM system from the dealer sends all the information back to the motor finance company. Now, they might do credit decisioning in, say, 30 minutes. But then, the way they actually pay the dealer for that, if it's successful, is they either have to go to the internet banking portal and type something in, or they batch it all up until the end of the day, and then they submit all the batch for payments, more possibly next day in the morning. So the dealer actually receives the funds next day at, say, 10 o'clock. But the dealer actually wants the client to walk away with the car now. And some dealers trust the bank enough to say, I got an okay from the bank, I'll let you drive away. And there are others who say, I can't let you go just yet because I haven't received the money. Now here, if you had an open banking PSD2 real-time payment, the dealer could effectively use that, and the bank implements that, and the payment is made instantaneously and through an API. So this is just an example, but there are many such propositions.
Sure. So, I mean, banks opening up effectively the clockwork under which their banking systems run. This has already always happened, so that it's running on mainframes or whichever systems they were running on. But the open banking, I guess, exposes some of this underlying infrastructure, this underlying engines of the bank to other third parties who can then build applications on it. So, I mean, Marcos, do you think that is opening up an opportunity for say, disintermediation? These third parties who now are sitting between the customer and the bank, is that going to create a tension between them? What are banks going to do?
Well, of course. I think that's the whole purpose, right? So PSD2 meant to increase competition within the sector, because otherwise you would have the big banks who would actually have an oligopoly of some sort, and then would be able to play in their own terms. So the whole point is to inject a little bit of competition into the system and provide more opportunity to other players who are not traditional players, are not familiar perhaps even with the market, but want to have a shot at providing good quality services to customers, and potentially perhaps even cheaper. So that's in terms of the competition, right? So I think banks will definitely feel a bit of pressure in that respect, but that's healthy. That's what we want in the UK economy. Otherwise, there's no innovation. You have to have some kind of incentive. However, there are ways to deal with this pressure and come up with sort of constructive new business models, perhaps, or approaches to this kind of openness, right? I guess the natural way to respond to an open banking scenario where banks will have to share this kind of data, this kind of information, is for them to become more like platforms. And when we try to explain open banking to, for example, our students at the business school or our executive education kind of participants in the programs we do, we often refer to iPhone, for example, right? So iPhone is a product in itself, so it's a smartphone, but on top of that, you have all these external applications, so third-party applications that connect to the phone exactly in the same way using APIs, different APIs that Apple and Apple Portal kind of puts forward to the developers, right? So, and what happens then is that obviously a lot of these applications compete with Apple. So you have applications for email, you have applications for messaging, you have all these applications, but this is a healthy competition that Apple wants because it brings more value to its customers. So I want to buy Apple iPhone because I know that there are about 2.2 million applications on top of it. So I'm not just buying it for the device, I'm also buying it for the value added from all these third-party developers, right? So this is a business model that has emerged the last 10, 15 years, especially through the emergence of APIs, because they allowed for more integration, they allowed for these kind of exploration of external value that was not invented within the company. So not invented here, kind of as a quote, is something that technology companies are quite familiar with, but the banks and institutions in the finance sector are not necessarily as familiar. So we're becoming more familiar now. So that, obviously allows for further integration. So you have this cool app now sitting on your phone, which you can use seamlessly. Like, you don't need to exit the phone or log into some other kind of system to use that service. It's part and parcel of your system that you use. And we expect something like that to happen because of open banking. So corporates, for example, will be able to join some of these new apps or fintechs or value propositions that will, though, integrate nicely with their bank, right? So you'll be able perhaps to do some international payments by using your current bank account, or maybe even invest or have visibility for your transactions, which are then being processed through your bank, right? So I think that's kind of like the easiest way to explain, in terms of integration, in terms of openness. So it opens up all these possibilities. Obviously, there needs to be some comprehensive way for the banks to make money and for the fintechs to make money. There are different strategies to approach this. I think this is more for the banks to decide what they want to be. Some banks, for example, might want to take the place of more of a utility, like a back office infrastructure that the distribution is happening exclusively from the fintechs. Some might want to be more involved, be more visible, and even compete with the fintechs in the same way some Apple applications compete with external applications that they're allowed on the system. But you want this healthy competition. You don't want to have only 3 fintechs on your platform, because again, that will create another monopoly. You want to have as many fintechs as possible because you want them to feel the pressure as well, right? So you always want them to be at the cutting edge of innovation, otherwise you don't get enough value from your customers, right? And I think this is something that the corporates will need to examine their banks on. Do they do a good job in bringing on further innovation? What's in it for me? Kind of questions like that.
I think that's a really good analogy, looking back at the applications on, say, the iPhone, because you're ending up potentially downloading an app which is maybe free to you as an Apple phone owner, but actually, obviously, there's a lot of investment going to provide that system. So the question for me, I guess, is how these third-party providers, these application innovation service providers, counter-innovation service providers, and payment initiation service providers, how they're going to make money out of this, because they're effectively they're not handling the money at any point. It's all moving between the banks and the clearing system. So how do they charge? Will they charge customers directly, or so corporates or individual consumers?
Yep. Well, they could charge customers directly. Obviously, some of the profits will have to go to the bank that this kind of fintech application is kind of using to provide this service. It could be some kind of a free service to the corporates, perhaps, but be a revenue sharing with the bank that is being considered as a value added for the customers. So it's an attraction. Like, I'd probably choose Lloyd's, for example, if they collaborate with a particular fintech of interest to me, right, for international payments or something like that. Obviously, that will compete with their own proposition for international payments, but that's better than me going somewhere else to use this fintech because Lloyd's is not collaborating with them, for example, right? The other thing I think is standardization will help. You mentioned about investment before. So I think if these APIs are somehow standardized across the different banks and into the kind of entire national movement of open banking, for example, in the UK, like the Open Banking Limited kind of is putting forward certain standards, it's going to be less and less of an investment for these fintechs to be able to plug in to many different systems. So in terms of integration, so it's going to be cheaper. So these value propositions, usually they're very cost effective. So with a minimum kind of investment, they're able to tap onto different systems. So.
And I think that's a very important point. So in the UK with open banking, there is a single API which we've established to interface between, as part of the regulator's requirements to meet this remedy for our current accounts. In the rest of Europe, there may be many other different APIs. And in fact, one of the first APIs I was aware of was the API from Nordea, which I think has been out over 18 months now. Great opportunity, potentially, to be able to take advantage of Nordea accounts if you were a third-party provider looking to to access their information.
And that's significant for the corporates, I think, because, for example, the accounting systems you're using, you might want to, for them to be easy to connect to all your banks that you're using, right? You don't want them, it's going to be a lot easier for them to connect, and a huge value, for example, for the treasurer.
Sure. So, I mean, you've talked about credit, you've talked about a number of other applications. What do you think are going to be the most interesting applications from a corporate treasury point of view? What's going to save corporate treasurers sleepless nights?
I think it's going to be the Treasury Workstation, the transformation of the Treasury Workstation. So the Treasury Workstation has been trying to do that, as we talked about, not in real time, end-of-day statements, updates through the day. If that then becomes available to work in real time, that makes the Treasury Workstation a really powerful tool. So I think from a treasurer's point of view, I think that's going to be the immediate win, I think.
I would also say credit, because obviously, credit is important. Using these kind of methodologies, new technologies, your bank can have access to your either accounts or accounts receivables, accounts payables, depends on what it is that you give consent to share. And that allows, so the richer the data set that a bank has on you, the easier it is for them to make a credit decision, right? And possibly give you better terms. So when you're going slightly blind, the risk team, the credit team tends to say no. When you have a bit of information, which could be third parties and some information you've submitted, the answer is a maybe and a bit. And the credit appetite of the bank is limited. But there are lots of discussions going on right now where effectively, whether you use an accounting package or an ERP solution, if your accounts are in there, your GL, etc., if your accounts receivables and payables are in there, and you allow access in a limited manner, but to your bank, then the credit decisioning becomes easier, stronger, and possibly offer you better terms.
So you see these expanding to trade finance and things like that?
Absolutely. So all of those, and any part of working capital, really. So part of your working capital cycle, you might at some point need supply chain finance, you might need asset finance, invoice finance, overdraft, loans. These are all part of working capital. But all of these are underpinned by credit decisioning. And if you have a better access to information, a bank can give you a decision which is in your favor. But also, potentially it allows the bank to also, with your consent again, monitor in real time rather than looking at a 12-month-old return, which means that you can have an ongoing revolving credit, which the bank might be willing to give because they have access to data.
So I'm hearing that actually information is very important. So Pedro, in terms of being able to stand behind your creditworthiness as an organisation, maybe even as an individual consumer, is that the sort of service you think might really help with your relationship with your bank?
I mean, it's always interesting because we do like also to control how much information we share. So it would be an interesting decision whether we want all our banks to have direct access to every single piece of our ERP. But it is an opportunity, certainly. And if you do a lot of supply chain finance, trade finance, things around working capital management, if your company has a heavy user of those banking services, then it is definitely a big opportunity for you there. And it does take a lot of the complexity out of the process. I mean, it's rather interestingly, again, I still go back to the Treasury Workstation you mentioned, and it's funny because if you're a big corporate, you actually created your own Treasury Workstation. You use Swift for corporates, it's all automated, you press a button, payments go out, etc. If you're a little bit smaller, you tend to I upload the file, I put here, I put there, I use my FX system, but then I have to manually do the payment somewhere else because they log into whatever banking system.
Yeah, so possibly my response was into the smaller businesses, it's that opportunity. And if you look at the sorts of software as a service like Sage, Xero, that will become so the sort of Treasury Workstation type environment then suddenly becomes available to smaller businesses, and gives them a real advantage. Yeah.
So Nadia, will having more access to better real-time information, will that help you do your job?
Yes, for sure. Another thing that we sometimes struggle with is, for instance, the know your customer procedure. So I was just talking to Bloomberg. They have a really nice solution. However, the banks are also talking about EBAM solution for a long time already. But I don't know how open banking will solve that in the future. You know, whether it will make life of corporate treasurer easy or not, and make it a little bit simplified with the sharing of the documents which you have already provided to one bank. Yeah.
So I think, strictly speaking, it's out of scope for PSD2, and Tim can confirm. But that sounds like a really good need, which I know a lot of corporate treasurers have big problems with.
Yes,
on the customer due diligence side, and ensuring that the appropriate forms are.
It's very time consuming. Yeah.
Absolutely. A previous employer changed banks, and I won't mention the bank's names. It took them 9 months to go and get all the mandates signed, and that was only for moving accounts in Europe. 15 accounts across different countries. Tremendously complicated. It's the number of different boards I suspect they had. Would you agree?
But yeah, I mean, it's not regulated or proposed as part of the legislation, but I think the investment that we've made in APIs internally and interfaces out to the outside world, and the fact that these are now being readily used in other industries, etc. This is an inevitable type of product that becomes available and easier to use and consume, probably free for you to populate that information.
Yeah.
And then the bank who needs that information to validate your company's information would pay, because, you know, whilst it may take 9 months to open a bank account, that's not good for the bank either, you know. So there is a design. I think EBAM I've been involved in discussions about EBAM for probably 15 years, I think. You know, I don't know why it hasn't got there, but I think the fact that we've got new technologies for communication that are becoming widely accepted and trusted facilitates that in the future.
Good.
So just to add to that, so we shouldn't be waiting for regulation. So
No.
you know, if we as an industry had been open about access to information, providing real-time support to an ecosystem of other people, partners who could do stuff for our clients, the regulator wouldn't have to step in. But because we don't, the regulator usually comes up with something which is an impetus. And so the fact that open banking, PSD2, came as regulations is really forcing existing players to invest in that capability and open it up. But then we shouldn't be waiting for regulation to do other bits. You know, that's what I'm looking at, for instance, going forward. So, for instance, KYC. Even if the regulators don't mandate a better KYC experience, actively there are participants in the market today looking at it, and as an industry, we should definitely be supporting that.
I guess that the banking industry generally probably hasn't learned the lessons from SEPA, where you start off with a long process where the European Commission was very keen to encourage the banks to do the right thing and develop the schemes for SEPA, and we were very successful in doing that. But the encouragement to migrate corporate and retail customers onto SEPA credit instruments, what just didn't happen. And relying on self-regulation from the industry, as you're saying, that wasn't a successful process. And in the end, the regulator had to act with the SEPA directive to actually force that migration across onto the new payment schemes.
Yes, and if your cash management bank has multiple responses to this, right? One is, I will do the minimum that the regulator asked me to do. Possibly you turn into a utility then, because all you are is an account information provider and a payment infrastructure provider, and then third parties effectively use you to provide innovative solutions to clients. But you could also be saying, as a cash management bank, I have a lot of information on my client, because obviously we do banking, so every time something hits an account, I know what happens. I have access to aggregated, anonymized, but information about the behavior in the market. I probably have access to third parties who could provide what else happens in the market in terms of the macro situation. And then I could be creating benchmarks for you. So effectively, with using all of that, I can give you peer benchmarks in terms of companies of your size in that kind of a sector, in that location, seem to have this leverage ratio. They seem to have that kind of a ratio of number of employees to revenue. So those are the kind of things bank could do with this information that even the regulation is now asking for. Apart from things like faster payments and all.
Yeah, I think I totally agree with that. Actually, something that and sorry for the intervention. I think something that some of the financial institutions are missing is that financial services at the very basic level is an information business. And I think the banks will need to find new ways, and other people in the industry, not just the banks, will need to find new ways of actually of extracting value from data. I think that's something that has been missed. And of course, not just ticking boxes in the regulation and just going a step forward. For example, for a KYC problem, you could have from one of the big banks some kind of passport API, right? Which would send all the documentation to another bank and would be more than enough for any other financial institution to say, well, if Lloyds is satisfied and this client has all these accounts for all these years, and then I can use a secure way to get this information, i.e. an API, then that's great. You don't need to do all the KYC from the beginning.
And in fact, one of the things that the payment systems regulator in the UK has looked at is portability of KYC information to try and alleviate the problem that we know we've got moving KYC information trusted by Bank A to making it trusted by Bank B as well. We've got a question from the audience, and let me remind you that please do ask questions via the app. We will try and take as many as we can on the stage. One of the questions which has come in is around the potential cybersecurity issue of letting third parties between you and the bank, letting third parties access it, making payments on your behalf, seeing access to data. Obviously, that could be a concern. Anyone particularly want to take that?
I think it's at the forefront of concern, and I think it is one of the things that needs to be overcome in terms of people and organisations having trust in open banking, and once that trust builds, then services will start to be used, but without the trust. So it is very much a concern, and I think if you looked at contactless as a card, there were lots of individual trust issues. Can I really trust this? Is someone going to do a swipe by in my wallet? But because people now trust that as a technology, it's so widely used, and retailers, I think probably 6 months ago they were saying, do you want the receipt? Now a lot of retailers don't even offer the receipt, and it seems to be widely acceptable. So I think that's what I would like to see with open banking, and I think we'll get there. It is secure, but we do, that trust is an ever-present thing.
So I guess at the moment in the UK we have actually open banking and applications. If I were a corporate treasurer and I was approached by a third party saying we'd like to go and provide you with these services, how would I check that party was on the level? Yogesh?
I think so Tim might know more, but I think the open banking, the website and the entity, implementation entity,
registered.
There's a list. So every third party is registered with them. So when a bank provides information which has been requested by a third party, the bank has to go to the registry securely, check that they exist there before we do anything. Yeah. For a corporate to know whether that third party actually exists in the list or not, I don't know, Tim, is there a way for a corporate to automatically check, or do they have to go on a website and check?
Well, they could go on the website to check, but potentially built into an application, they could go to do that call to find out. Yeah.
And certainly, I think the advice from the FCA is that you should go and check on the FCA website to make sure that the organisation is appropriately regulated. And in the UK at the moment, verifying that you're dealing with the right organisation can be quite tricky. One of the things that the European Union has just released, the new standard from the European Telecommunications Standard Institute, is a standard around using cryptography to prove that it really is that third-party provider talking to the bank, and you can then use that similarly to go and check that that third-party provider really is the organisation you think it is. So I think those sorts of cybersecurity concerns are real, and so thank you for raising the question. I think obviously there are things in progress to try and alleviate those concerns and those fears.
Yeah. I guess that one thing that some people kind of forget is that sometimes sharing information over and over and again through web portals might probably be even less secure. It's just that we're used to it and we prefer that over perhaps communicating information through, or knowing that our bank communicates information through APIs. You know? So it could be more secure in the end of the day.
So let's look at a couple of applications which may be of interest to corporate treasurers. One of the ones probably not applicable to most organisations is the issue of cash concentration for franchise issuers. And the issue they've got is, say, a car rental company or maybe a fast food restaurant has a large number of franchisees who are paying single accounts. And typically, and this is why I guess one of the things that open banking might help with, is that the quality of reconciliation information is really very poor. Maybe using open banking and issuing an open banking type of application to the franchisees might allow them to make those payments straight into the franchise holder, the franchise owner, rather than with the appropriate sets of information and knowing that payments got through, rather than trying to rely on the franchisee typing information into the mobile banking system. But that's all about information. Do you think that sort of information type of solution might be helpful in general, not rather than in this specific example? Do you think that information is the area that is weak at the moment in terms of our payments flows?
Yeah, I mean, reconciliations is a big problem, right? And it's because you don't have the right kind of information on the payment when it comes in. Yeah. So given that open banking and PSD2 are implementing the ISO 20022 format, which is a more expansive format, which allows you to have better narratives on them. One is obviously you get more information back, which allows you to reconcile better. But the second is, with open banking PSD2, you also have the concept of pay by bank. So rather than when you're at a checkout, it could be point of sale, but it could primarily, an e-commerce checkout. You could be saying you have three options: pay by credit card, pay by debit card, pay by bank. If you say pay by bank, obviously the customer gets redirected to the bank's security to authenticate. But when that payment is sent, it's the merchant who can pre-populate the references and the narrative that they need so that when the payment comes back, it's reconciled. So it's not a customer entering a reference number which could go wrong, but it's pre-populated. Now, that's a huge potential, and people are starting to look at that, because just imagine the number of people you have within your organization, and all they do is reconciliation, and the issues that you have. And I know a large utility company, a water utility company, where because when people make payments to pay their water bill, they were not writing the right kind of reference numbers. This money was going into a suspense account, and it's client money, and they were sitting on over 250 million pounds, and the regulator was after them to release those funds while they were writing red letters to clients saying you haven't paid yet. So having this ability where open banking PSD2 allows you to pre-populate this information, that reconciliation could become easier.
And you bring up an interesting point around retail payments. And so obviously there's a potential that you could use a pay by bank rather than, say, your credit or debit card that we're currently using. Do you think that offers corporate treasurers and businesses generally the opportunity to move away from accepting cards both and also using corporate cards for purchases? Is that going to help, Pedro?
I mean, possibly. I mean, at least it creates more competition, so it... I can only see that as being a benefit, and this is interesting for the disintermediation point we mentioned, because I actually don't think we have that big a problem of competition in banking, but if you go to Visa, MasterCard, Maestro, and the couple, we do have a big issue of competition in that industry. So if you start disintermediating the big providers, like it's a pity we don't have anyone from Visa Europe or something on the panel, from that, it does open interesting opportunities, because we still make a lot of card payments, and the card payments are still a big intermediary for retail, basically.
Nadia, would moving away from cards, would that help you, or is that not a worry you have?
Well, it doesn't really worry me, but I don't think we will be really moving away from cards. It's still something you can feel, you can put in your wallet, you can smell it. The applications, yeah, it's something you don't see, it's on your watch or on your mobile. So I don't think in short term or medium term that the cards will disappear.
Can I just add, for corporates and especially treasurers, there is a very key aspect of using cards versus using a pay by bank, which now this regulation allows. So obviously, if your customer pays by bank, then the money is in your account today, now, instantaneously T0. With a credit card, obviously it's T+2. But then there are pros and cons to it, right? Because a credit card offers certain protection, which a pay by bank doesn't offer yet. Obviously, the cost of a card is higher. And potentially a pay by bank could be just a few cents or pence, So there's that, and I think there is opportunity in the market for either banks or other participants to create some kind of an overlay on top of this, which is an insurance overlay, which says if you pay by bank, obviously it's cheaper. You're not paying 2%; you're paying a smaller amount, but we can still offer some kind of an insurance which takes care of if something doesn't get delivered or something goes wrong, you still have that consumer protection.
So it's the issue around liability in case you are, what cards were referred to as a chargeback incident where something goes wrong. And that, I can see that there's a need for that, because obviously we know that payments go wrong, and when we're making interbank payments, sometimes it can be quite tricky to go and resolve those and get the money back if we've mistyped the account number we're sending that information to. Interesting set of challenges. Other applications which might help us. So, I mean, we've talked about reconciliations being a big problem. Would you ever think about outsourcing your reconciliation to a third party, Nadia?
You do want to keep it in your own treasury environment, because it's really something you do want to see on a daily basis. Know your opening balance, know your closing balance, and obviously the movement, the intraday movement. But you do want to see the real-time movements and not on an hourly basis, which is happening right now. So I don't see it outsourcing in the treasury environment.
It's not a big enough problem for treasury. It may be a problem in your payments factory, but within treasury, that's not an issue. Pedro?
I don't think so. I mean, it's a key part of our. I mean, we might outsource it internally, but to a complete third party.
Good.
It's just Teresa likes to control the cash. It's vital.
What you do.
Absolutely. And I guess trying to understand where the business cases for these lie will be what fintechs are doing at the moment, trying to understand where the commercial areas of success are. Marcos, do you have any organisations you've spoken to or who are really interested in this particular opportunity? Any of your students been having brilliant ideas as to what the next big thing is?
I wouldn't share that here, though. Just kidding.
Go on.
So I think the whole idea is going back to data, right? How do you kind of aggregate data or analyze data in a way that you can extract more value from it? And I think that through open banking and having more integration from different systems will allow you as a bank to make suggestions to your clients, to corporates, or how to better use maybe their cost reserves, right? So in terms of your cash management, you might be losing out on opportunities because you don't have clear visibility of what's going on. So some more advanced tool that really can make some suggestions about perhaps some kind of temporary investment or putting money aside for a particular reason might be kind of something that you might be kind of more interested to know as a treasurer, right? I guess there are multiple fintechs doing multiple things, both in terms of investments or maybe savings accounts. People are trying to take advantage of the single market in Europe and facilitate perhaps opening savings accounts in countries that have different interest rates, and then you can obviously integrate that into your business, or as a bank you can offer that to your customers. So yeah, there are many different ideas of how you can take advantage of this kind of open banking and more integrated kind of ecosystem. But I think it's all about kind of integrating and also aggregating data that will allow you to extract more value.
So a lot of these bank strategies regarding open banking may well be, I guess you could summarize it, and it may well change for each bank depending on the customer segment and depending on the region as to whether they're going to be commoditized, they're going to step back and say, actually, we hold the money, we're just going to make money on the transactions, whether they're going to actually collaborate, so create marketplaces for vendors who could offer their services through the bank, whether they're going to develop services themselves and compete and become AISPs and PISPs themselves. Or I guess the other opportunity is this colonization you're talking about, where a bank might say, actually, we want to offer services in this other country. We are a small bank in, for example, Luxembourg. We think that France is a great market for us. Let's go and offer services over there, and if we are successful, we might establish some branches. But before we do that, let's go and just test the water and see whether our brand has any recognition or any traction whatsoever. So I guess there might be some interesting developments in the banking world and interesting amalgamations in terms of new market entrants. So, one question. So, I mean, we talked about securing and talked about cybersecurity. One of the things that Payment Services Directive 2 brings in is strong customer authentication. So that's the use of more than one of something you know, something you have, and something you are. Corporate treasurers are quite used to this. The passwords you log in with and the security tokens typically sitting in your desk drawers, perhaps with a post-it note with a password for the security token sitting on it. I'm sure that never happens. But the other opportunities for biometrics. And do you think this is an opportunity for banks to step up with their security, both for consumers and for corporates as well? Do you think that's an opportunity?
I'm not sure that necessarily this is an opportunity, but what I think it's inevitable, because it's a war. We have to continue to increase and improve and make sure that systems are secure. So I wouldn't be at all surprised if biometric type of things start to become part of the authentication process. I'm sure that some organisations are already doing that. They're doing it in the retail space for logging on to apps with a thumbprint. So I think it's inevitable that we'll see more of that, just to enhance and stay ahead of the game.
So do you think that the Treasury staff out there may be required to go and provide their fingerprints or iris scans or any of these other very high-tech means of authenticating who they really are to their bank at some point in the not too distant future? Maybe voice prints?
I think it's important that this is solved, because strong customer authentication is by far the most painful thing that the regulation is going to bring in, because you don't want friction in any journey when somebody is trying to do something, and which is why people love cards, right? I put a card on file and I can do the Amazon one click. Yeah. But strong customer authentication would mean every single time I use that open banking or PSD2 to make a payment, I have to authenticate myself for each payment. So using a token, using something else. And I think we all have to start looking at, and banks will look at biometric as a way to make that a more frictionless journey. So the fact that you can do a Touch ID on an Apple phone, and that identifies you, identifies the device, recognizes, there's a whole authentication there. To embed that within that journey will make it more seamless, because otherwise you will see the adoption of these kinds of journeys that have strong customer authentication not as high as you would expect or as the regulators would expect. So the answer is yes, we are looking at it, and I think as an industry we have to address this and invest in it.
Thank you. So can I just go back to the question we posed at the beginning of the session? Knowing what you now know and understanding, of course, the ins and outs of PSD2 in end-to-end and open banking and what it might mean for your treasury operations. Let me just ask that question again. Do you feel that you now know, or you are at least starting to be on that preparation scale? Could you vote now, please, with the application and let us know whether we've been successful in pitching the open banking proposition to you? Of course, if we're really successful, you might have gone backwards, and you might say, actually, we're underprepared. But anyway, let's see what the answer is. Very good. So at least the initial results are good. Well, I think we've moved quite a few people from the underprepared and underinformed to at least the somewhat prepared and informed. So that's good. I'm all for making sure that the information flows out there. And do feel free to come up and ask the panelists or myself any questions you have on PSD2, open banking, what we're doing in Europe and what we're doing in the UK. I'd like to thank my panel for an excellent session. Thank you for your insight. Thank you for making it relevant for treasurers. And thank you for everything you've done. Thank you very much.
Thank you.
Thank you.